Now may I call upon C.H. Balaji Praveen Kumar from Rayalaseema University. He is going to present on a study on investors' grievances and redressal mechanism in Indian capital market. Please take only 3 minutes.
To the respected dignitaries on the dais and off the dais, thank you for giving me the opportunity to present the paper. My topic is a study on investors' grievances and redressal mechanism in Indian capital markets. So first of all, I would like to define what is capital market. As everyone, actually, just it is interlinked with my objectives and even the conclusion because of that. So as we all knows that it is a financial system concerned with raising the capital of shares by using shares, bonds, and other long-term securities. So our country's economy, complete economy is depending upon capital markets. That is what. Okay. So coming to the objectives of my study, it is to investigate the status of investor grievances and received and redressed, and to investigate the penalty amount paid by the companies to fail the redressal of investors, and to analyze the failure to redress investor grievances with order passed under section 11B. Coming to my research methodology, completely I took the data from SEBI annual reports. Official websites I took the data, and period of the study is for 5 years. That is from 2010 to 11 to 2014 to 15. And as 15 to 16 data is not available, I could not collect it. Coming to the tools of the study, I used trend percentages and graphs to analyze the data. Coming to the data analysis, next slide please. So you can observe status of investor grievances received and redressed by SEBI. Okay. So in the year, that is what you can see. Every year it is pending actions, grievances. That means pending grievances are year by year it is decreasing. It is a good sign for the economy of a country. And coming to the next slide. Coming to the next slide, it is the penalty amount in lakhs, and even the companies almost it is increasing. It is not good sign, as the if the companies whatever the complaints are reducing, even a common investor can invest more and more amount. But as we can see, number of entries it is increasing every year. So even the penalty amount, there is some fluctuations, but in the year 2013 to 14, it is 120 lakhs. It is it is more, even it is 300% it is showing. And coming to the, when the order is passed under 11B, actually if they were not able to solve the problem within a particular period, SEBI is taking some strict rules and regulations. So when the order is passed, even the companies are doing their best to solve their problems. So that is what you can easily observe from these tables. 3 tables, that when there is some strict rules and regulations SEBI is taking, then the companies are coming forward and solving the problems. So coming to the my observation, even conclusions, our country's economy is completely depending upon the growth of the capital markets. So because of that, to give confidence levels to the investors, SEBI should take some necessary, important or major actions to come forward and to take some actions, so that even a common investor like me and you can invest more amount of money. Thank you. Thank you so much.
Thank you. It's a good paper. And may I now call upon Sudha Madhavi. She is going to present on insider trading and issues. Sudha, you will get 3 minutes. And Satish Kumar, please be ready. 3 minutes only. Yeah.
Good afternoon on the dais, and dignitaries on the dais and off the dais, and most of my colleagues and less students. Good evening, I can say. Good evening, everyone. In this paper, my paper is a conceptual paper in which I made an attempt to bring about the norms about the insider trading. We know it's a conceptual attempt I have made to identify the rules, amendments, and the cases pertaining to the insider trading and its issues. And this information is collected mainly from the secondary data. Insiders, a firm's principal owners, directors, and the management, as well as its lawyers, accountants, and the similar fiduciaries, routinely possesses the information that is unavailable to the general public. Insider trading undermines public confidence in the security markets. If the people fear that insiders will regularly profit at their expense, they will not be nearly as willing to invest. So here I have a small a study made. Is it the insiders which are creating a problem, or is it the outsiders who are keenly observing the insiders and making the attempt to fraudify the situation? So I made a detailed study in my main paper. In the full paper, I made an attempt to do it. Here I'm just putting the glances of it. The regulations. The prohibition of the insider trading regulations of 1992 seemed to be more corrective in nature. The 2002 amendment regulations, on the other hand, are preventive in nature. The amendment requires all the listed companies, market intermediaries, and the advisories to follow the new regulations and also take steps in advance to prevent the practice of insider trading. The new regulation include mandatory disclosures by the directors and other officers of the listed companies and also by the persons holding more than 5% of the company's shares. Insider trading practices are also required to be curbed during the important announcements of the company. The regulations. These preventive measures ensure the reduction of the cases involving the practice of insider trading and also informing the persons who indulge in such practices of the laws relating to the insider trading. Now coming down to the restrictions made by their norms. No insider shall communicate, provide or allow access to any unpublished price-sensitive information relating to the company or securities listed or proposed to be listed to any person, including other insiders, except where such communication is an important, of the legitimate purposes, performance of the duties or discharge of legal obligations. Second one is going to be, no person shall procure from or cause the communication by any other insider of the unpublished price-sensitive information relating to the company or securities listed or proposed to be listed, except it is important for the legitimate purposes, performance of duties or discharge of certain things. Here I have taken one case where Charles, who is an insider, has purchased Texas Gulf Sulfur shares during 1963 and 1964 when he came to know that the Gulf Sulfur has identified certain mines, and before entering into an agreement, he knows if the agreement is going to be successful, definitely the share prices will boom. Before this agreement made and released into the market, he purchased the shares, which is against the norms or ethics.
Will you conclude, please?
Yeah, sure, ma'am. In the conclusion, next step, we have certain things. In the European norms, they have very clear and transparent things regarding this insider trading, and moreover, it is left to the ethics of the people to use this particular information, what they got, how to use it and all the things. Thank you. Thank you.
Thank you, Sudha. Now it is Satish Kumar. Satish, please focus on HFT. Please come, 3 minutes. You focus on the impact of HFT.
Within 13 seconds of last half an hour trading, 27,000 trades took place. So, and the 27,000 trades created a lot of chaos in the US market. And similar things also happening across the globe. In the Indian context also, both in the case of equity as well as derivatives market, high frequency trading increasing. Like between 2011 to 12 and 2015-16, when it is observed the data which is presented in my paper, there is a growth of number of trade concerned, there is a 40% growth, and the volume, the amount concerned, it is almost 70% growth is there. Because of the last hour high frequency trading and participation of only by few people and using the special software, using the special software nearby the stock exchanges, lot of problem is created amongst the investors. So how to stop this? For this, Australian market, US market, UK market and even Indian market now focusing how to stop this. Actually it was the US market encouraged the high frequency market after the collapse of the market in the 2008 for the purpose of liquidity in the financial market. Now the same market is now contemplating how to control it. Now similarly Indian market is also contemplating what to do in the case of high frequency trading and how to stop the expected fraudulent practices by using the high frequency trading in the in the context of India and other markets too. Thank you, one and all.
Good, Satish. You have chosen a very apt topic, high frequency trading and algorithmic trading. Try to improve upon your paper. Now, may I call upon Babita? Actually, she was to present.
My topic is accounting frauds, its detections and preventions. Accounting frauds scandals are political or business scandals which arise with the disclosure of financial misleads by trusted executives of corporations or governments. Such misleads typically involves complex methods for misusing or misdirecting of funds, overstating of revenues and understating of expenses, overstating the values of corporations' assets, and understating the existing liabilities. And there are three major types of frauds. In that, misappropriation of cash, inflation of payments, suppression of receipts. Second one is misappropriation of goods. Third one is manipulation of accounts. There are steps to reduce the accounting frauds. First one is educate the management on indicators of frauds. According to the Association of Certified Fraud Examiners, financial statement fraud involves the intentional publishing of false information in any portion of financial statements. Second step is segregate accounting functions. One of the main factors of an effective internal control system is segregation of duties. Management helps to prevent fraud by reducing the incentives of frauds. Third step is establish a strong internal control. A strong internal control, it involves enlisting management to demonstrate ethical behavior. Fourth step is initiate annual examination of financial statements by an outsider parties. In many cases, management is the party committing frauds. My conclusion is by implementing the necessary steps, we can reduce the accounting frauds in present-day corporate sector. For this need to monitor time to time by the central government, SEBI, specified stock exchanges, auditors, and management. Thank you for giving this opportunity.
Thank you very much. Now the settlement and trading mechanism is settled for today.
No, it's only that. Yeah, you get another one, sir. To CMA Durga Prasad, sir. To Professor Usha Kiran, ma'am. To Dr. K. Srinivas, the rapporteur for the session. Thank you for all the presenters and the participants.